Good evening. Welcome to the ShadowTrader video weekly for Sunday, November 4th, 2018. Title of this video is A Lot Riding on Tuesday, which is, of course, Election Day 2018. Kind of a big deal, in case you haven't heard. And when I say there's a lot riding on it, obviously there's the obvious, which is what it means for the country. But since these videos are all about the market, we're going to talk strictly in terms of technicals and what the possible shakeup on Tuesday night means for the markets. There are certain inflection points that we might be hitting soon and where we might be going from there. But before we get into those nuances, let's start with some monthlies here. And I'm just going to use Spider and QQQ and IWM because I've got some Fibonacci's on the cash market charts that I want to show you, and I don't want to disturb those for now. But this was obviously a very bearish October. Large rout to the downside. Notice that it was a buyer's shut-off of multiple months. A buyer's shut-off is when you have one big candle taking out multiple smaller candles in a prior period, so that's considered a buyer's shut-off in this situation. And we do still have, or I should say we came right down to a very short-term trend line in the S&P and bounced. And I think this is very, very nuanced here because it is relatively short-term when you look at the monthly. And there is definitely a chance that we roll over again and retest and go to where? To the longer term trend line, obviously, which has a lot more import because it's obviously much longer term. But for now, just focus on the fact that the candle from October is very, very large. And the reason that's called buyers shut off is because it's very, very difficult for buyers to take it back up to the high. Usually what will happen is you'll get some sort of a move to the backside of the trend channel, like the short-term trend channel, and your turn, or some sort of a Fibonacci retracement, and then you'll turn. And we're going to get into that in a second. QQQ, same pattern, big body to the downside, a little bit more weakness here in November thus far in the first couple of days here. And finally, last but not least, the Russell, which I think was kind of a leader in the beginning to the downside, and same thing. I mean, it's really a huge candle, and again, we'll see where, if at all, we can bounce somewhere to a fib level and then possibly a turn. Okay, so what do I mean by a lot riding on Tuesday? I specifically mean the technical picture here on the daily in the S&P has a lot going on, and there are some very, very key levels just above us, and I do feel that the catalyst of, I should call it the catalyst of craziness, so to speak, because futures will be wild on Tuesday, I believe, and subsequently into next week, Wednesday, Thursday, etc., will decide the fate of these technical levels. So right now, we're at this kind of perfect storm, which I call this little rectangle here, which I've marked off as this rectangle, which is, of course, the 50% fib, which would be halfway of the down move. And also notice that the market had a lot of congestion around the 200-period moving average, which is the blue line here. And last but not least, the 20 MA has come down and now pinched through, has crossed the 200. And this is also a kind of a negative cross here, is that the 20 crossed over the 50, and interestingly enough, now the 50 is rolling over to the downside. That is noteworthy because we have spent a long time with the 50-period moving average only sloping in one direction, and now it has it has turned over into the other direction. So I think that is noteworthy. So the focus next week is going to be on this level, Monday, Tuesday, and then we'll see what happens Wednesday. I think if we get a close above this level, I think the odds are strong that we push on up to the 61.8, which would probably be a very good short point in the market because notice that there was resistance there before. And note that more than likely, this 50 MA is going to continue like this, and sellers will probably be selling against a retracement back to the 50 MA. Okay, so that's the S&P. Let's look quickly at the NDX, which is a similar picture. Again, same triangle, 50% retracement, backside of the trend line. Here's your 20 MA, and of course, here's your 50, bending over. And again, if we do manage to cross that there, then we could go up to the 61.8, which would be just under 7,300. And in the Russell, which I was kind of calling a leader, notice there's such a huge difference and huge amount of space here between getting from current prices even up to that 50. So I'm wondering if the Russell is actually acting as a downside leader currently, in that the bounce is very, very weak in the Russell, and it's managed to get it's managed not to get very close to that 50 MA like everything else. So keep that in mind, that if the Russell continues to kind of struggle, it implies much more of a risk-off environment. Okay, let's take a quick look at profile, and I want to point out a nuance that happened on Friday that I think is very important that might actually point to a bullish resolvement, at least over the next couple of days, to what's going on here. So the nuance that I want to point out is simply the lack of gap fill on Friday, which I found very interesting. We had a gap here. Remember, a gap is measured only in terms of the actual space between the high of one day and the low of another. It has nothing to do with closing or settlement. It has to be an actual space on the chart, which can only be left by a high of one day and a low of another when we gap up, and vice versa when we gap down. This action that you see in here is, of course, the overnight session that caused the gap. And anyway, Friday's action, notice that it had this gap to fill, and it only filled halfway and left this other half unfilled. And I think that's just kind of noteworthy. The market had decent momentum to the downside. There was certainly a lot of buyers in the overnight kind of trapped up here, so they sold the market early. And then we balanced out and we continued to balance. But when it came time to finally break down below this level, and this level was very key because notice that it had actually 3 sessions there as a low. You had the RTH low here, which defined the gap between these 2 sessions. You had an overnight session here, and you had another regular trading hour session here that for all intents and purposes was really a double bottom with this one, more than likely. I feel that's close enough, basically, when I see that. So you had a lot of confluence of technical support here, and then you broke, which basically I think should have brought in more sellers, but it didn't. So that's a tell. So even though I'm going to be relatively quiet over the next couple of trading days, just kind of waiting for the midterms, I really don't want to have any options positions on coming into that Tuesday night. I am going to be looking for some possible daytime frame strength early, Monday and Tuesday, just as sort of a follow-on from everybody expecting that gap was going to fill, and it is not. Remember, one of the biggest tells in the market to follow is always when something should happen but doesn't, pay attention. It's always very, very important. And that's basically it. I think I'm going to leave it there this week. Kind of short and sweet, only about 7.5 minutes. But I think I've touched upon the main points that you want to be looking at in terms of the major averages and what the market is doing here coming into the midterm elections. I'm purposely not giving out any forward-looking statements or trading ideas because I do feel that next week will be quite volatile, and to be quite honest with you, I have absolutely no idea how the market will react to the results on Wednesday morning. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading